Hello everyone, this is Evan from the Trade Risk here on Saturday, February 13th with a weekend market recap video. We are first going to analyze the current market environment. We're going to look at some other markets, sector analysis, individual names, and then some trade ideas to get you into next week. Now, it was a very volatile week. We had a lot of action both for the bulls and bears. We ended up closing down 70 basis points in the SPY, so almost 1% for the week in the S&P 500. But that was helped out by Friday's strong rally. We had a 2% rally here on Friday to close out the week, which really did help get us back into position of almost where we opened the week. So let's take a look at where we've come from, where we are now. Last week, we spent most of our time carving out a range here in between 187.50 to 194, call it 50, right in here. Monday, we gapped below that this prior support level. So we broke support on Monday. Tuesday, we went sideways in this range. Wednesday, we tried to get back above into that level, above that prior support level. We failed. Thursday, we tried to push lower. The bears arguably failed that day, and then Friday we had a rally back to the top end of this range. So just classic sort of range-bound, choppy, volatile behavior. Now, Thursday, a very important day, and let's go to this cash market of the S&P 500, zoom out and look at the weekly chart, and look where we tested and found support at again. It was to the tick, the lows here from January the 22nd, maybe underticked it by just a little bit, but we effectively retested it and we rallied sharply off of it. Now, we did have a perfectly timed OPEC sort of news-related deal, that they reached a deal to cut production. Whatever the case is, we had this rumor fly out as soon as we were testing these lows, and it caused this big rally, at least a big short covering, as soon as that came out. Now, coincidence or not, the price here ultimately encompasses, all of the news, all of the reactions, and we did bounce strongly from it. So I think you need to at least respect it. But note that we were at an extremely vulnerable state here. This support has held in since 2014. If we start to close below this level, I would expect you would see that panic that everyone seems to be waiting for, that really big flush or capitulation type move. I think you would see some really fast trading and some high emotion here if we start to break below these lows. And the beauty is, if you're long or if you're a bear here, you have a very, very clear defined line in the sand to sort of take action. If you want to be long this market, then you can absolutely be long this market, and you know exactly where you should be exiting because you know where you're wrong. We found support here. We saw this nice bounce. If you think this bounce has legs and you think these lows are now good, then certainly you can get long with a stop loss at 1820 here in the cash market, or 1818, whatever the level is, and you can play it that way. And if you want to be on the short side, you can have a small position now and then start to get more aggressive as we break below that level. I think that's sort of the beauty of sort of this bounce here is, we just have the stakes very clearly defined for us moving forward. So I think you need to pay attention to that. I think that'll be a big level. No idea if we're going to break below that again or not. Looking at the current structure of the market now, we're still in a downtrend here. We have resistance above us. We have the fast-moving averages, slamming down sort of in bearish formation. That is going to pressure price. So we're certainly not out of the woods yet. We had some type of relief bounce here into the end of the week. It is a long weekend, so perhaps that squared up some shorts that didn't want to be short into the weekend with China coming back online. So we had a few different interesting sort of scheduling considerations to at least think about that maybe influence some things. But the bottom line is 187.50. You got to get above there. If you're bullish, that's a level to at least neutralize, in my opinion, sort of this landscape that we're in. I don't think it makes us bullish, but it would at least, confirm that the bulls are alive here. They took out this resistance level. There's some life here from the bulls, and I think that would be constructive. Ultimately, though, it's back above 194 or so. Getting back above that and breaking out, then that would start to get you a lot more bullish. Now, it doesn't mean you can't play longs in between that, but I just think you need to be tactical and understand where you are in this sort of environment. So at best, I'd say it's neutral right here, just certainly depending on your time frame. Let's see if this bounce can get some more legs to it. We did see a 3-day bounce back here in January, the 20th, the 21st. And then coming into that, and then Friday the 22nd. So we did get a 3-day bounce. Maybe we see another 3-day bounce and then run into some issues here into 190 or so. We'll have to see how it plays out. But I think the levels are really clearly defined. So it just really depends on how you want to execute on that and how it fits into your trading plan. The Russell, the small caps, these were beaten up today this week a little more heavily, down 1.5%. Still though, we have this line in the sand right here, right around $97.80 or $98 really. This is where the bulls need to get back above to turn this sort of small cap indice neutral. Again, bearish trend all the way around. The weekly chart, we don't have the big high stakes level like we do in the S&P 500. We already broke below that level back here at the end of December of last year. So this is still just in full bear trend mode, and we'll have to see if the bulls can step in and save that one. The Qs, similar comments, bounced back a little bit today. $100 is the big level to pay attention to here. That's the high stakes level that the Qs need to reclaim. So let's see if they can do that in the coming week or so. But I think you have some pretty clear levels to work with in all of these major indices. So that should be helpful in navigating the markets ahead. Now, if we look at some other markets, start with TLT. This ended up, continued surge higher in this trend that it's been in, but it did start to give that back here late in the week. You can see if you look on a weekly chart, this was the big level that we were looking at, 131, almost 132, and we blew right by it, but look how we ended up closing the week. So maybe a little too much excitement here, heading, at the starting this week and mid this week, and then we ended up giving most of that back on Friday and Thursday. So we'll have to see if this is if this is going to put a pause in this sort of trend here for some time. We'll have to see if this pulls back further. It'd be certainly healthy to come back down here, and even a 125 retest over the next couple of weeks would be completely healthy in this. But just keep an eye on it. Still very bullish. Still a lot of strength here. Let's just see if that pullback continues. Gold. Again, monster surge to the upside here. Look at the size of this gap. Again, looking at the weekly chart, you can see we tried to overshoot this very important resistance level, and then it seems like Thursday, Friday, the market kind of came to realization, came back, sold these markets back off. So still extremely impressive. It's stretched in the near term. You have some signs that maybe this wants to come back in, fill the gap here. So just plan accordingly for that heading into next week. Silver, similar situation. Didn't get the very, very big pop like gold did, but still pretty strong trend here. We were fortunate enough to be in this trade from Wednesday the 3rd, and we exited here on Thursday. So a really nice trade for us, probably the best trade so far for 2016 for us, and that worked out real nice. We're flat, we're out of this trade, and we'll just look to see if this sets back up in the future in silver. Finally, USO. This one did this little false kind of breakdown on Thursday, where we thought, maybe this prior pivot low around $8 wasn't going to hold. Maybe this trend was just going to continue lower. But we did get that. Again, that was that rumor that sort of came out on Thursday. It reversed price. We closed near the highs, and then we saw follow through back into this range. So it looks like, you have some very clear defined ranges to work with here in most of the major indices and markets. $8 or so, or if you want to take Thursday's lows at $7.70, that's your line in the sand. Perhaps we chop around in here. Again, the trend's still extremely, momentum to the downside, but at least you have a range that looks like you want to start to that the market wants to work in there. UNG, this one's still struggling to hold on to this little area of support right above $7, $7.15. It's trying to hang in there above, trying to make a higher low above the December lows here. So let's see what happens with it. It's a fairly actionable short if it can start to break down here. And then again, you have this declining trend line here to play for a breakout to the upside. If we can start to clear, say, above $8, you might be able to get a squeeze back up towards these highs here. Now, if we look at some other markets, some sector analysis. The staples outperformed and had the best week out of all the sectors here. You can see it's still range bound, but it's still holding up there pretty damn well, especially when you take this in comparison to pretty much every other sector out there. Had a green week. You still have this big resistance here, but this is still where sort of some of these safe havens are staying and persisting in. Materials, this has come up again. This has been the theme for the past few weeks. These guys are starting to firm up a little bit. You can see we had a strong surge higher, a little bit of a pullback, and now maybe they're starting to get going again. So had an impressive day on Friday. Keep these on watch. I get a trade idea in at least one of those later in the video, and even the industrials coming back a little bit. Still got beat up a little bit this week, but all things considered, back above $50 and would start to look a lot better there. Really, the avoids, the semiconductors still continue to be very pressured. Financials had a strong rip on Friday, but still in some very pressured sort of formation here. Technology still in a difficult spot. So let's see how these play out heading into next week. Now, if we look at some individual names, Apple continues to try and grind on the support here right around $93. Buyers do seem to be stepping in here with some of these tails you can see on some of these recent days. So it works until it doesn't. Just keep an eye on it. $93 though is trying to hold in there. Google, similar situation. This support down here right around 685, 690 or so, still holding up. It still looks kind of vulnerable here, so be careful, but so far that's holding. Amazon, similar situation, looks very vulnerable here, a weak bounce. I know they issued some type of buyback. I don't know how much the market really liked that, but this one just certainly looks vulnerable, so be careful here in Amazon. Facebook, all of these similar kind of formation, weak bounces right now. Let's see if they can, base sideways to sort of strengthen up and solidify a bit, or if they're just going to turn into bear flags all around. Tesla had earnings out, seemed to be favorable earnings based on future guidance, but the stock didn't react a whole lot. Small pop. Again, this one's still like Amazon, looks vulnerable. Keep an eye on this 140 level. I think you get a pretty clear range from 160 to about 143 or so. So keep that level on watch. Twitter had an impressive move on Friday, 10%, almost 11% day. Amazing that an 11% day doesn't do a whole lot to the whole structure of this. We're still very clearly in a downtrend. You have some resistance above us right around $17, so perhaps this has more room to float, maybe another $1 or so to the upside before it starts to really test some of this previous supply here. And then you also have this level up here at around $18.50 to $19 to keep an eye on in Twitter. So that's some individual names. If we look at some of these trade ideas I have for us, a little bit longer time frame, safer names that were coming up on my scans. CAG is one packaged food name you can see on the weekly chart. Been basing out really tight, pretty resilient for the past few quarters, and it had a strong move, 5% move today or this week. So keep an eye on this 42.50 level. If you can start to clear above there, I think that long-term trend gets back intact, so keep an eye on that one. X is another one, so this is the really beaten up material sector, steel play. US Steel, not ready yet, but look at the bait. You can start to see the early formations here of this basing behavior. Had a nice 8% day on Friday. Still really needs to clear back above $8.30, but it's something to keep an eye on. This is starting to move. You're starting to get some of these big pops here, and we'll have to see if this sector starts to see some rotation into it in the coming weeks. Next is WM. Again, probably a longer term play here, this waste management, but industrial sector, remember we talked about some of the strength there. This is a pretty clear, well-defined resistance level, $54 in the stock. It's been in a long-term uptrend, could continue there if that starts to break out in the coming weeks. And then finally, HON, another industrial sector play here. You can see pretty well-defined support, more of the longer-term kind of trend following slower name here, but something that's still pretty actionable and that you could try and play in a few different ways depending on your strategy. So all those names we'll be keeping a close eye on heading into next week and the weeks to come. So that's what I have for this week. I hope you enjoyed the video. If you do, please subscribe, bottom right hand corner. Otherwise, thank you for watching, and I will catch you next time.